easy money. Take a look at these easy scalp trades that I've had on the S&P in the last hour. Look how many of these opportunities there have been. Buying, 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 selling, selling, selling. And when you look at that and you look at the kind of amounts of money, I mean, 24.5 up to a high print of 27. It's 12 ticks. It's 12 ticks. It's a bit of 12 tick profit on that. The sell trade at 26s, a low price of 17s. 9 points. 9 points. $450 on a short scalp here. Another sell trade here at 21.5. A low price of 15s. 6 points. Another $300. $300 in about 4 or 5 minutes on a short sell scalp. Now, when you look at these short sell scalps and you're looking at these ideas, very much like what we were talking about in bonds, we're looking for a misprice. We're looking for an anomaly in the matrix, aren't we? We're looking for that tiny little anomaly that sets up an opportunity. Now, when I'm scalping the equity markets, it's generally, as a rule, it's going to be something to do with an internal. It's very much like oil. Scalping oil for me is about trading the crack spread skews. Scalping bonds is about trading the curve spread skews. So when we see these ideas, it's not about trading oil against the bond. It's not about trading oil against bonds. It's not about trading bonds against the Japanese yen for these types of scalps for me. They're bigger picture stories that I want to try and build into, and I try and find my scalps as a perfect timing entry. So when I'm trading equities, I'm not trading equities because we've got something happening on the Canadian dollar or the Aussie dollar against the Japanese yen or something like that. That's an outside market. It's more likely to be valuable for a swing. In other words, the correlation coefficient is going to be lower for those markets, and therefore they're not specifically perfectly suited to be a scalper in. Does that make sense to everybody? A scalp for me is something that is a high probability, stops at break even, rapid type trade. Get me in, get my stops at break even, and if it goes, it goes. If it doesn't, I'll take a tick. I'll take a tick happily. Take a tick on those trades. So obviously when I'm looking at the S&P, I'm not going to be looking at the pound against the yen. I'm not got any market internals because it's before 2:30. I only get the market internals really kicking off at 2:30. So the at highs lows, the prem, for example, these are all useful, scalpable trade products because we can actually trade against short-term value divergences. So when I look at this against the things like the NASDAQ, for example, here, well, you can see that there is almost zero ability for me to scalp the S&P against the NASDAQ, simply as a line, because they're almost 100%. They're almost 1.0, correct? And they should be almost 1.0. There should be very little opportunity for you to ever make an arbitrage between these two products. It's very, very rare that you see an arbitrage on a 1-minute chart basis. And as a result, we can already recognize that this is a horror story in terms of scalpable opportunities. But I don't trade the NASDAQ against the S&P in the London session. I trade the NASDAQ against the VIX in the London session. And you can see the difference in the line. The difference in the line means that when this line is sloping up and I get a down candle, I can scalp the buys, 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 I can scalp the buys. I can book my profits. When I see the bottom edge here, I could be potentially scalping buys, but at that stage I hadn't been trading equities because I'd seen a couple of trades in bonds. But there was a perfect scalp there on the perfect scalp trade here on the S&P for a scalp. And then these two sells, the line's dropping. So I should sell into that, and there's the drop there. This big candle here is probably scalpable. There's a bit of value in that dropping candle. And then during this drop, there's a green candle here. The line's dropping, so I can scalp, sell into that. As this line starts to diverge, there's a great opportunity to scalp buy into this. Now, this one had a small drawdown attached to it. And either that drawdown stopped you out, or you were happy to take a 4-tick drawdown during that phase. And obviously the takeaway from that was a very good upside. This scalp was a sell because of the divergence in the background into a bottom edge where I closed off the trade. And then obviously what I've now been doing is I've been looking at this as a scalp sell here. And you can see it's made money, and a scalp sell here. And you can see it's made money. scalp sells. So when we look at these as very simple scalp sell opportunities, we can see where the easy scalps are. Now this can be tied in with a bigger macro narrative on, for example, the 6A, 6Cs against the J's and the S's as a storyline. It can be tied in with the NASDAQ against the YM sentiment storyline as well. So we can get a kind of bigger macro, more macro feeling about whether the market is bullish or bearish. As we go along to the side, you can see that sometimes we simply don't get many tradable opportunities. Sometimes there's just nothing visible. Sometimes it goes on and it goes on and it goes on and you're waiting for your first scalp, and then all of a sudden you see it and there it is. All of a sudden you see the opportunity to scalp something and there it is right there. You see how easy it is to spot that? You just get a scalp on and you say, right, I'm selling 29 halves offered. And then all of a sudden you're trading 24 halves. You've just made 5 full points, $250. Now I know it's a 1 minute chart and it's a long time to wait for $250, but that's $250 per contract, remember. If you're doing a 2 lot or a 3 lot, that's a $750 winner right there for you. $750. Now since then, this will start getting more and more and more information because we're starting to see more prints coming through in this as a storyline. So obviously the accuracy of this bit gets better and better and better the closer we get to half past 2, right? So then we get another scalp and we make some nice money. We get another scalp, we make some nice money. We get another scalp, make some nice money. We get another scalp, make some nice money. Another scalp, make some nice money. Another couple of scalps, made some nice reasonable money. Divergence coming in here. Is that a scalp buy? No, because it's about fair value on a net basis. If it was a little bit lower, I could have scalp purchased that little green candle there, but I don't think it's quite good enough just yet. Pretty straightforward. Yeah, I think so. There's a context to all of these. There's a background context. There's a micro world structure context as well. And when you're scalping anything, you're trying to put the two elements together. We covered that on bonds this morning. When we were chatting about bonds this morning, we were covering the context of the bond marketplace. Now, the reason why I went into the scalp mode was probably something that you guys will already be able to agree with, because we had a chat about it this morning. The chat we had about it this morning was I was not sure what I wanted to do on equities today. We've got a commodity risk line that seems to be relatively bullish. A's and the C's against the J's and the S's is relatively bullish today. But yet we've got the rotational line seems to be very negative for us just now. And that's obviously something that we have to acknowledge, that there is two conflicting signals in terms of risk elements. As a result, I don't like any swings on the equity charts just now. And if I don't like any swings, I'm going to be more inclined to just move down into the lower time frames and try and scalp a bit of business, just so that I can keep busy, so that I can make some money whilst I'm sitting around doing feck all anywhere else. So we can obviously start to recognize the reasons why you might scalp, because obviously the reasons why you might scalp is to reduce your size of stops, the fact that you haven't maybe got a lot of time to spend on your charts, you want to get in and out and make some quick money, or alternatively you just prefer swing trading. And that's obviously one of the things that you when I say swing trading, we're talking about the intraday swing type trades. But if you're going to do that, you need to have these value lines stacked up, and you can see they're completely opposite directions. So that means I am in a scalp mode narrative. A scalp mode narrative. I don't want to be hanging about. I want to be scalping the quick scalp opportunities when I see them. And I'll take a bit of value. And that's all I'm doing. That's all I'm doing in these areas. We lost the gold value. We'd been talking about gold earlier. And we'd been talking about these trap sells. So I'd got a trap sell here. I'd got a trap sell here. It was coming into this seller's imbalance. But you can see what happened. We lost the value here. We lost the real yields during this phase here. So when we're coming down into these lows, we basically were just closing off our positions I think I mentioned, I don't know if I did, but I think I mentioned if the price breaks lower, I'd be keen to buy some gold. It never broke lower, so I wasn't keen to buy some gold. So when we see this, we can recognize that there is, again, a conflicting signal here. The dollar is very strong. The real yields, however, are now starting to fall. And as a result, we're starting to get into this idea that with real yields falling like this, the dollar might be a little bit overpriced. And that might allow us to think about the dollar becoming a possible short play. But the only reason a dollar would become short is if that equity holds the bid. It's quite straightforward, isn't it? If the equity holds a bid, we can look forward to selling some dollars. So if you're trading on the euro, for example, and you see the equities catching a bid, start bidding the low prints. We know what the real yield's doing. Start looking for those low edges. Start looking for those wholesale price areas and start looking for that opportunity to make some monies. If equities start getting offered again, stop trying to bid the lows. Makes a lot of sense, doesn't it, guys? Going to grab a little bit of lunch. I will be back in 10. I'll be back.